Sir, on Monday I made a ministerial statement raising a number of points and explanations which I don't propose to go back into. This afternoon there have been a number of contentions concerning various parties and suggestions as to who knows what and at what stage and which party. Let me just be clear that I'm not privy to any income or Allianz's thinking about the transaction or its deliberation and the views that they may have taken in relation to or arising from the transaction. As I've explained on Monday, MCCY was given information which it reviewed, it looked at carefully, and decided that it would not be in a public interest to allow this transaction to proceed. And thereafter, we discussed and proposed for this bill to take effect so that MES and the minister overseeing MES would have the ability to take on board MCCY's views in relation to this particular transaction. So I hope that makes it quite clear as to where I'm coming from when I give my answers today. There were also a number of members who asked what happened behind the scenes, what steps were taken, and whether or not some parties were approached. Let me first start by saying that the decision to take this step was not one that was taken lightly. It was after very careful, deliberate consideration, and even after that, it was decided that we ought to do this in as narrow a way as possible, as I had explained in Parliament on Monday. In addition, the government decided to act after we came to this conclusion and to do it in as transparent and as forthright a manner as possible. Let me explain. First, we decided to give a complete account of the basis of our objections and our views right here in Parliament. As I explained, there are considerations because it's a live deal. There is price-sensitive information, market-sensitive information. But the moment we were aware as to what steps we were going to take, how we proposed to take them, we came here, made a ministerial statement, and explained fully, and then tabled the bill. We've made it clear that the government does not have concerns over Allianz's standing or suitability to acquire a majority stake in income. Allianz is a major global insurance company and asset manager, and we acknowledge that it can bring financial strength and expertise to income. Our objections were to the structuring of the transaction and some of the terms of the deal, as I had explained on Monday. Second, we framed this bill because we acknowledge that under the Insurance Act today, there is no provision explicitly which allows MES to consider the views of MCCY in the case of an application relating to an insurer that is either a co-op or linked to a co-op. Therefore, we tabled the bill, as I mentioned, narrowly to amend the Insurance Act to provide a clear statutory basis for MCCY's views to be taken into account. Third, as I mentioned, the amendments are scoped specifically to only apply to a licensed insurer that is subject to an application under Section 26 and Section 27 of the Insurance Act, and where the licensed insurer is a cooperative, has acquired the business of a cooperative, or has substantial shareholder or effective controller, which is a cooperative. We are not seeking broad powers that covers general insurance transactions or of a broad remit in nature. So we have chosen to act in this way because we feel that's the most transparent and above-board manner. It will uphold rather than diminish Singapore's consistent reputation as a hub for business that is open, transparent, and rules-based. Mr. Saktiandi asked whether and what steps have been taken to engage Allianz and if any engagement have been planned. So, MES and MCCY, as I explained, we sought to understand the plans and the proposed transactions. So we obtained information, we studied them, and once we assessed and decided that it is not in the public interest to proceed with the deal, we thought it is better to take an open and transparent approach in the manner that I have outlined. Mr. Neil Parekh and Mr. Mark Lee raised some questions around social mission. I think Mr. Chua in particular has related his own experience. So it is very broad, and I think Mr. Chua's speech does acknowledge that it is sometimes in the nature of the way in which social mission has to be carried out. And it also has to evolve to match the aspirations and the needs of each generation. So by definition, there has got to be a level of flexibility, malleability, and which allows the parties charged with their social mission to adjust and to take steps to adjust. In this case, parties would have heard from my ministerial statement that income, and I think earlier on you heard SMS Desmond Tan speak to that as well, income had reiterated that it would discharge its social mission at the point of corporatization and exemption, and also at the point of this transaction. Specifically in the case of income, it has over the years been very clear and seeking to expand its social mission, such as providing for the needs of persons with disability, migrant workers, low-income workers. This is how it looks at its social mission portfolio. And I'm not saying that it may not change down the road, depending on needs of society. That may well need to change. So in some ways, you've got to give flexibility to the manner in which a social enterprise looks at its mission in the context of the industry that it is in and decides what specific products to raise. I think Ms. He also asked whether one day it could become health insurance. As I said, I'm not speaking for income, but I would not see that it is so unconnected from its current life insurance business that it may well be covered. But it's something that I express no view on. Safe to say that I think we need to give some degree of flexibility and malleability to the concept. I want to also say that a point of applying for exemption under Section 88, a point I alluded to earlier, income did emphasize that it continues to remain strongly committed to its social mission of providing affordable, accessible, and sustainable insurance to the underserved communities. In relation to what Mr. Chua said, what Mr. Parekh said, that definition by income itself gives you some indication as to how they see the social mission and how they see themselves discharging that social mission. Whilst I'm on the point about the exemption, Ms. He raised a couple of points on the exemption, and I'd like to address them. To recap, I had explained previously the circumstances in which Income, the co-op, proposed to convert its legal status from a co-op into a corporate status. There were advantages that it felt it could avail themselves of, such as, for instance, there were limitations on the extent to which dividends could be declared by a co-op, and that itself made it less attractive for investors, for strategic partners to come in to work with income. It also needed the ability to broaden its capital base. I think there's some debate about what we mean by capital buffers, capital resiliency. I'll address that in a moment. But what is important to bear in mind in relation to Ms. He's question on representations and what was discussed in the context of the corporatization and the exemption, Income said very clearly it wanted to do better in the insurance business. It emphasized that it would continue to do its social mission as before, based on a quote I read earlier, and that it would only change its legal form as far as its business was concerned. What's also important to bear in mind in the context of the exemption is that Section 88 applies, as I explained, in the context of a social cooperative seeking to wind up its business, to cease its business, stop altogether. And then after paying off its debts and accounting for other charges, it will have surplus, or it may have surpluses, which then comes into the consolidated fund. That's the raison d'etre behind Section 88. In the context of Income, the cooperative, the raison d'etre or purpose is quite different. First, it was, whilst being liquidated and wound up, it was not ceasing its business. In fact, on the contrary, it was trying to do its business better in a corporate vehicle that would allow it to reach out to strategic partners, access capital, and so on, to do its business better. So it was fundamentally not winding up its business, not stopping, and therefore, on that basis, it needed to then say, I would also have these surpluses, which I had accumulated before, brought into the new entity. And it was on that basis that we granted the exemption for the surpluses to also flow through into the new corporate entity. Ms. He also asked whether there's a link between surpluses and social mission. As I explained earlier, I think we have to give a degree of flexibility to the entity charged with that social mission to decide how to apply it. And in the context of income as it stood post-corporatization, its majority shareholder was NTUC Enterprise, also a cooperative. It also had a number of other smaller minority shareholders which were also cooperatives. In that context, we left it to them to decide how you want to carry out your social mission, how you would deploy the surpluses. You may offer migrant workers insurance, you might offer mental wellness insurance, and so on. It's something that I think we need to give them a broad remit over, given especially that they've converted into a corporate entity, a point that I made on Monday as well. You can't, on the one hand, say you can corporatize, but on the other hand, you still have to behave as if you're a cooperative entity. So I hope that answers Ms. Her's questions around the surpluses and the link to the social mission. I would add, sir, that it is not for me to say how income ought to have structured its transactions with Allianz or with any other party. What we do know is in this present arrangement, for the reasons I've set out, which I'll briefly summarize in a moment, we were not comfortable that after this transaction, given the context in which it was done, that income would be able to carry on with its social mission. The reasons we came round to this view, if I may reiterate, were the capital reduction occurring so soon after the exemption, the amount that was involved, the fact that there was no arrangement within the terms of the present transaction which would safeguard or ring-fence the advancement of income's social mission, nor were there any structural protections in the terms of the proposed transaction that would allow us to have comfort that its social mission would be protected. And we were also not clear what other adjustments or changes income might be able to make thereafter to its portfolio, whether it would serve this area of underserved in the insurance business, trim its portfolio, change it altogether, or reduce. There were also no controls there. So cumulatively, these factors, taken in the context of this transaction, where income would cede majority control, were the reasons why we felt in this case this was not acceptable. As to what is acceptable, it is not for us to speculate. And if the parties, as they have indicated publicly, wish to reevaluate, reconsider, we will consider that when they have structured any new arrangements. So finally, I want to address Ms. Hazel Poa's speech. She makes a case that the 4th of August 2024 statement by income is misleading. And I think she quoted the words capital resilience, that I think it's paragraph 7 of the statement that you were reading from. Am I right? Yes. Paragraph 7 talks about the need for the transaction to take place so that income could build up capital resilience. You also spoke about capital buffers coming under pressure and questioned whether that statement is true. And you also made the point, effectively, that you are not able to reconcile the capital reduction with the need for the proposed transaction to seek capital resiliency. Would I have accurately summarized your contention? Yes. So the transaction is between two insurance companies. And part of the arrangement following the transaction was a capital optimization exercise. In the context of an insurance company, I think members would understand that there is a need to maintain a capital adequacy ratio. The ratio is determined either by reference to the assets you have or the liabilities you carry. Either one of them can affect your capital adequacy ratio. And consequently, either one of them can affect your capital resiliency. If you increase capital, you can have a better capital adequacy ratio. Similarly, if you decrease your liabilities, you can also increase your capital resiliency and ratio. On that basis, this arrangement allows for income to reinsure part of its portfolio of risk. And the moment it is able to reinsure that portfolio of risk, it would not have to maintain that level of capital to meet the capital adequacy ratio. So in that context, even in the proposed plan for a capital reduction to take place, if you have a portion of the portfolio that has been reinsured and taken off your liability books. That will contribute towards a more healthy and positive capital adequacy ratio. I don't have details and specifics of the numbers and the plans, but that is the principle on which this was done. And that's why we are able to say, as I did on Monday, that after evaluating the capital optimization plan, MAS was satisfied that despite the capital reduction taking place, income, the new entity, would still be projected to meet all its capital adequacy ratios with a healthy margin. I hope that explains. And that's why on Monday I said this statement is not misleading. Thank you, sir.
I think we'll take clarifications after the POHs have provided their statements. Minister Chee Hong Tat, Leader.
Mr. Deputy Speaker, I beg to move that the proceedings on the business set down on the order paper for today be exempted at this day's sitting from the provisions of Standing Order Number 2.
The question is the motion moved by the Leader of the House. As many as are of that opinion say aye. To the contrary, say no. I think the ayes have it. The ayes have it. Minister Chee Hong Tat.
Mr. Deputy Speaker, I thank honourable members who have supported the bill. I note that the Workers' Party plans to abstain and is not supporting the bill. Members have raised several important considerations relating to the bill, and I will summarise into 3 categories. First, how to strike a balance between regulations to protect public interests and maintain investor confidence. Second, how does the government ensure that interagency information exchange and coordination does not compromise on commercial confidentiality? And finally, clarifications on the capital reduction plan, bill parameters, and coverage. Sir, please allow me to address the key points and the questions that members have raised. Mr. Liang Hua, Mr. Satyandi Supat, Ms. Joan Pereira, Mr. Neil Parekh, Mr. Mark Lee, Ms. Usha Chandradas, and Mr. Ip Hong Wing recognize the merits of the government's intervention in this deal, while raising questions about its impact on business confidence and Singapore's role as an international insurance hub. They also ask about the likelihood of future government interventions and how transparency can be maintained to preserve trust in our system. I would like to assure the House that Singapore remains committed to upholding our status as an open, rules-based and pro-enterprise business hub. The same applies to MAS as the financial sector regulator. There is no change in this regard. We will continue to welcome investors with our business-friendly operating environment. When legislative amendments are proposed, the bills are presented and debated in Parliament in an open and transparent manner. We will explain the rationale for the proposed changes, just like what we are doing now for this bill. MAS maintains a regulatory approach that is consultative and provides stability and predictability for industry players. As a standard practice, MAS consults on major policy and legislative changes. For complex policies, there could be a series of consultation papers to obtain feedback from stakeholders over an extended period. During these consultations, MAS would incorporate relevant feedback and address concerns that arise. This bill is an exception due to its urgency because the deal with Allianz is under consideration by shareholders. And it is tightly scoped to cooperative insurers, insurers that have assumed the business of a co-op or have a substantial shareholder or effective controller that is a co-op. This recognizes that insurance co-ops are a special category of insurers with a social mission. as there's currently no provision in the Insurance Act which allows MAS to consider the views of MCCY in the case of an application relating to an insurer that is either a co-op or linked to a co-op, the proposed amendments would allow the Minister in charge of MAS to consider the views of the Minister responsible for the administration of the Cooperatives Act and to withhold approval involving such applications if the Minister in charge of MAS considers that it is in the public interest to do so. The bill does not affect any other insurer or the financial industry at large. Mr. Satyandi asked about the bill's impact on existing free trade agreements for activities in the financial services sector. It does not impact our free trade agreements. As I've explained earlier, we do not have concerns with the suitability of Allianz to be a majority shareholder of income. Our concerns lie in the terms and structure of this particular deal, and such concerns would apply whether the acquirer is Allianz or any other entity, and whether the acquirer is local or foreign. To Mr. Neil Parekh's comment that control of income should not be ceded to foreigners, I would reiterate that the government agrees with NE's and Income's intention to find a strategic partner to strengthen its competitiveness and capital base in the long term so that it can continue to do well, to do good. If the concerns of MCCY can be addressed in a future deal, the government is open to consider such a proposal, whether it is from a foreign or local entity. The most important consideration is the outcome, that Income becomes a stronger entity that is able to serve its policyholders well and fulfill its social mission effectively. To Mr. Satyandi's question and also Mr. Leong's question on whether we have engaged Allianz, the answer is yes, and they have indicated that they understood the reasons for the government's decision. Mr. Leong can have a look at their public statement. Mr. Neil Parekh asked how the government will ensure that any future partner can contribute to the financial strength of Income while still preserving its social mission. MAS has regulatory requirements and guidance in place for insurers to maintain sufficient capital reserves to meet policyholder claims, including under adverse conditions, and for insurers to have robust risk management frameworks in place. As an insurer, Income continues to meet these requirements. With the bill, the Minister in charge of MAS can, in giving his approval for an entity to obtain effective control or substantial shareholding in Income, impose conditions to ensure Income's commitments to its social mission is upheld post-transaction. We agree with Mr. Mark Lee that businesses should be given an opportunity to address and correct draft plans before final decisions or interventions are made. And this is in fact what MAS has done for the proposed transaction. As highlighted in Minister Tong's ministerial statement, while the government has decided that it will not be in the public interest for the transaction in its current form to proceed, we are open for NE to work out a new deal, whether with Allianz or another entity, which can address MCCY's concerns. Sir, there is a balance to be struck between effective government functioning through information sharing and preserving commercial confidentiality to maintain investor confidence. Several members spoke about this. And as I explained in the House on Monday, information provided to MAS as part of its supervisory dealings with financial institutions, including Income and Allianz, is confidential and not normally shared with other government agencies. We recognize that companies submit such information for a specific regulatory purpose and not to enable general government evaluation. And as Mr. Mark Lee correctly pointed out, some of these information may involve sensitive decisions. In this particular instance, Income had special characteristics. As a former co-op, it had previously been under the regulation of the MCCY before its corporatization. MCCY maintains an interest in whether income continues to perform its social mission, as this was a representation given when income was allowed to corporatize. Hence, while conducting its assessment, MES considered that it was in the public interest to share the information with MCCY. Ms. Joan Pereira and Mr. Mark Lee asked whether the information sharing and coordination among agencies could have been done earlier. MES received business projections of the cash remittance in mid-July and was reviewing the information. As the MES team was still assessing the proposal, they did not surface this information to the MES board before the 6 August Parliament sitting. I had explained this on Monday. After the parliamentary sitting on 6 August, MES saw that income's plan, capital optimization, and cash remittance could be relevant to MCCY's views on the proposed transaction and shared the information with MCCY. The government then reached a view that it was not in the public interest for the deal in its current form to proceed. Ms. Jessica Tan, Mr. Satyandi, and Mr. Joshua Raj Thomas explained this well. The decision to halt the deal in its current form and the fact that we are here today to debate and approve the amendments to the Insurance Act demonstrate that due process works. It is about coming to Parliament after putting together the full picture, working across the whole of government to see what is the overall assessment of how to move forward on this important issue, and then coming to Parliament to present the information and proposals for Parliament's approval. I wish to thank Ms. Tan, Mr. Satyandi, and Mr. Joshua Raj Thomas, and also other members for their support in clarifying the facts, and importantly for showing appreciation to our public officers in MAS and MCCY. As Ms. Tan said, they were working hard and they were doing their jobs. In contrast, the Workers' Party, Associate Professor Jamus Lim, and Mr. Leong Mun Wai from the PSP took a different approach. You made serious allegations regarding our public officers, regarding our agencies. I do not know why you have to take this approach, especially after I had explained what happened on Monday. I had clarified the facts on Monday. Why is it necessary for Mr. Leong and for Associate Professor Lim to still want to throw our public officers under the bus? Why is that necessary, sir? Sir, I've explained earlier why MAS, when they received the capital reduction plan, needed time to assess, and this was only in mid of July. The officers needed time to go through this plan, and because they were not aware of the undertakings and the details of MCCY's exemption that was given earlier. The exemption was gazetted, but the details and the conditions and the undertakings, that was not made public. So I don't think it is fair for Mr. Leong to expect that the MAS team would automatically know what those details are when those details are not made public. It was only after we had a fuller understanding of the set of issues, after the 6th of August Parliament sitting, that the MAS team saw that there could be a connection to what MCCY was looking at. And then they surfaced this to the board, and then we shared it with MCCY. So I hope Mr. Leong and Associate Professor Lim could give our officers some credit, could understand what they were going through, and also look at it from their perspective, from their point of view. They were not trying to do something wrong, or as Professor Lim mentioned, to lead to multiple breakdowns of communications or to work in a siloed manner. That's certainly not what they were trying to do. They were trying their very best to do their work. And when they saw that there was a link, they shared the information. They surfaced it to the board, and then we shared the information with MCCY. And this is how the government then came together across different parts of the government, taking a whole government approach, coming to Parliament with this bill to seek Parliament's approval. This is the outcome of a whole of government effort. Mr. Leong asks, who should be in charge? Shouldn't the cabinet be in charge? I would like to ask Mr. Leong, who do you think made the decision to take this bill to come to Parliament? It is the cabinet that decided that we could not allow the deal in its current form to proceed, and that's why we are bringing this bill to Parliament for approval. Mr. Deputy Speaker, I would also like to address two other points that Associate Professor Lim mentioned in his remarks, in his speech earlier. First, he talked about SIRA, which is the Significant Investments Review Act. Sir, we have explained this previously. I think Mr. Satyandi mentioned it earlier in his speech, that the purpose of SIRA is to look at Singapore's national security interests. And we will look at whether an entity is a key provider of security-related functions, especially when there are few or no alternatives, and whether it is adequately covered by existing sectoral legislation. So there is a rigorous process to decide what goes into SIRA, and I hope Associate Professor Lim understands that if we are too quick to put many entities under SIRA, I think that will go against what many other members have spoken about earlier, that how then do you maintain investor confidence and have a pro-business operating environment? So we must have a good basis, a good reason before we decide that something needs to be designated under SIRA. Associate Professor Lim was also incorrect to point out that there are no controls if companies like DBS and Singtel were to sell their shares. I would urge Associate Professor Lim to check his facts. MAS would have to approve any changes in significant shareholding for banks, including DBS, and IMDA would have to approve any changes in significant shareholding for telcos like Singtel. Mr. Deputy Speaker, Mr. Satyandi Supat, Mr. Yu Hong Wing, Mr. Joshua Raj Thomas, and Ms. Usha Chandradas sought clarifications on the parameters of the proposed bill. Mr. Satyandi and Mr. Joshua Raj Thomas, and I believe also Ms. He Ting Ru, asked if the bill only operates prospectively instead of retrospectively, and if there would be any issues of retrospective application of the law. Sir, the bill does not affect any completed transaction, and I would like to clarify that there is no formal application yet by Allianz to obtain effective control and become a substantial shareholder of income. The contractual terms of the transaction clearly state that it is subject to regulatory approval by MAS. There is therefore no retrospective application of the law. Mr. Satyandi, Ms. He Ting Ru, Ms. Hazel Poa, and Ms. Usha asked if the existing sections 26 and 27 of the Insurance Act would already allow whole government considerations to be taken into account, since the sections provide that MAS may approve an application if the authority is satisfied that the criteria are met. To clarify, MAS takes into account all relevant considerations within the objects of the Insurance Act. There's currently no explicit provision under the Insurance Act for MAS to take into account the views of MCCY, which include questions relating to social mission in assessing a proposed acquisition of an insurer with cooperative links. The proposed amendment will provide for that. MAS did not expand the scope of sections 26 and 27, as MCCY's views would not be relevant for insurers that are not linked to cooperatives. And I think this is important, going back to the earlier point that Mr. Mark Lee, Mr. New Parek, and a few others mentioned, which is we need to make sure that we still keep our operating environment one that is business-friendly, and that investors will have confidence to continue to want to invest in Singapore. I think that is important, and that's why we wanted to scope it tightly for this purpose and not have a general clause. Ms. Usha also sought clarification on the interpretation of conduct its business prudently in the context of income. So this entails whether such an insurer will continue to be run in a safe and sound manner and safeguard policyholder interests consistent with MAS's prudential considerations under the Insurance Act. To Mr. Satyanti's question on whether there should be a comprehensive summary of various classes of target companies, we do not think it's necessary. The current case involving income is unique due to its cooperative history and social mission, setting it apart from typical insurers. For standard scenarios, the Insurance Act already clearly outlines the specific regulatory approvals required for such transactions. Mr. Leong Mun Wai asked whether the proposed capital optimization measures would weaken the capital adequacy of income. I would like to first assure members that MAS requires insurers to maintain, on an ongoing basis, adequate capital to address the risk of its insurance business and activities. As the capital required will increase as business risk increases, insurers may undertake capital optimization measures, such as reinsurance to reduce the risk retained within the insurer, without shrinking its business or weakening it. This will then reduce the regulatory capital required to support the same business. These measures that free up capital to be returned to shareholders is not an uncommon commercial practice, as Mr. Leong has pointed out. And to be clear, in the case of Allianz, they have provided a preliminary business plan to MAS in mid-July regarding the capital reduction. There was no application from Allianz for capital reduction. Mr. Deputy Speaker, I would also like to address a comment that Mr. Leong Mun Wai made earlier with regards to the capital reduction plan. So first, I think I've clarified that there was no application from Allianz. They only provided a prelim business plan to MAS in mid-July. I also clarified Monday and then also today, and a few members have mentioned it as well, that the due is still subject to MAS regulatory approval. So I hope those facts are clear. I do have an issue with how Mr. Leong has described the capital reduction plan as an asset stripping exercise. And I don't think that is a fair description. I think Mr. Leong deliberately chose that term. And this is not the first time I've heard Mr. Leong make unkind remarks towards NTUC. Sir, NTUC has explained, you heard from SMS Desmond Tan earlier, and also other colleagues from the labour movement, that they are entering into this deal with the right intent. They acted on good faith. They wanted to do the right thing. They wanted to strengthen income so that income is in a stronger position to serve its policyholders and also to fulfill its social mission. Because to do good, you must first do well. That was the intent. Now, we may have differences in views, as Minister Edwin Tong mentioned earlier, with regard to this deal, whether this deal is something that the government would allow to proceed. And we have come to the conclusion that we would not allow this deal to proceed. So yes, there is a difference in views between what NTUC, NE Income have put up and what the government feels is the right way forward. But we do not disagree with the objectives of why we are doing this or why Income is doing this. The purpose of doing this is the right one, is to strengthen income, to do well, so that it can do good. The members of the opposition often remind us that just because there are differences in views, it doesn't mean that we should automatically jump to the conclusion that you have a bad intention. I respect that view, sir. So I like to seek their agreement that in this case, please also apply that consistently, that just because there's a difference in views in terms of what the proposal is, how the proposal is structured, it doesn't mean that you should conclude that NTUC and NE were doing this without a good intent. I think that will not be fair to our sisters and brothers from NTUC and NE. Sir, Minister Edwin Tong has explained why we need this bill to give the government the powers so that our view will prevail. And we do not want the deal in its current form to go through. However, we remain open to income entering into a new deal, whether with Allianz or with another entity, if the outcome is that this can help to strengthen income. Mr. Deputy Speaker, this bill is being tabled and read on a certificate of urgency because the proposed deal by Allianz is under active consideration by Income's shareholders. The bill will allow the Minister in charge of MES to consider the views of the Minister in charge with the responsibility of the Co-operative Societies Act in applications to obtain effective control or become a substantial shareholder of a licensed insurer that is a co-op, has acquired the business of a co-op, or has a substantial shareholder or effective controller that is a co-op. The Minister in charge of MES can then withhold approval if he considers it in the public interest to do so. The Minister in charge of MES will also take into account prudential considerations under the Insurance Act in making his decision. The government has determined that this proposed transaction cannot proceed in its current form. However, we remain supportive of NE's and Income's efforts to look for a strong partner, including with Allianz or another entity, to strengthen Income's capital base and market position. The government recognizes and agrees that Income must do well before it is able to continue doing good on a sustained basis. Mr. Deputy Speaker, I thank members once again for their support for the bill. I hope I have clarified the concerns raised by Associate Professor Jamus Lim and Ms. He Ting Ru, and I sincerely hope that the Workers' Party can support this bill. Thank you.
Right. We have had a thorough debate. We've had 19 speakers, and the debate has lasted over 3 hours. Minister Chee Hong Tat, Minister Edwin Tong, and SMS Desmond Tan have responded, I think, to all, if not the majority of the questions raised. Be that as it may, given the urgency of this bill and it being read second and third time today, I will allow clarifications, but I seek the understanding of members to keep the clarifications succinct and clear, and that be reciprocated by the front bench in targeted and accurate responses. So I'll do my best to allow as much clarification time as I am able to. Any clarifications? Associate Professor Jamus Lim.
Thank you, Deputy Speaker. Let me start by stating unequivocally that I have deep respect for the hard work that our civil servants put in, often involving long hours and comparatively lower pay than they could have commanded in the private sector. But I feel that it's nevertheless imperative for me to highlight instances where the system that the civil service operates under, which is, to be clear, overseen by this government, is problematic, because our civil servants can only do the best they can within the constraints that they face from the government of the day. So, once again, to reiterate, I'm critiquing the system, not the civil servants. I do not think it's useful to bring in the civil servants as pawns to a political argument. Now, to further clarify, I did not say that there are no protections for the sale of significant assets like Singtel or DBS, but the additional protections are granted by CIRA. Accepting that we do not wish to list every possible Singapore firm under CIRA, I still have not heard a satisfactory reason as to why the designated entities are limited to only those within the military-industrial complex, whereas our total defense pillars clearly go into financial and digital elements. Let me put this another way. Could I confirm with the Minister that this government will never consider listing assets such as DBS or Singtel under CIRA.
Minister Chee Hong Tat.
Mr. Deputy Speaker, I would like to start by first requesting Associate Professor Jamus Lim not to put words into my mouth. I did not refer to our public officers as pawns, and I don't think he should too. We have deep respect for our public officers. We know that they work hard, they do their work well, and it wasn't so clear earlier when Associate Professor Lim was making all the criticisms about working in silos and having breakdowns of communications that he was referring to the system. Now, if his concern is about the system, I have also explained on Monday and then earlier what happened and why it was not in the ordinary course of operations for MAS when they are assessing information from a financial institution to share that with another government agency. Now, if Associate Professor Lim considers that as a failure, a systems failure, then I presume maybe he could let me know what his counter-proposal is. Is he then suggesting, and I'm not trying to put words in his mouth, I'm only asking, is he then suggesting that anytime MAS receives information, whether there is a reason or not, we should then share it with all other government agencies? I hope that's not what Professor Lim is proposing. I think that will have an impact on investor confidence, and it will affect our pro-business operating environment. So I've explained what happened with this particular case, and I've also reiterated the chronology of what happened, and I hope Associate Professor Lim can accept that account of what happened and not keep repeating unfounded allegations about the public service officers in our system facing constraints from the government of the day when it comes to sharing of information. I don't think there's any evidence, unless Associate Professor Lim can produce evidence. Otherwise, I would like him to please withdraw that rather serious allegation. With regards to CIRA, I've already explained earlier that this has to do with national security. And I also mentioned in my reply that we will also look at whether there are other acts that cover some of these entities. And if there are, then there's no need to replicate this with CIRA. So the two examples that Associate Professor Lim kept raising, DBS and Singtel, I've already explained. There are sectoral regulators. In the case of DBS, it will be MAS. In the case of Singtel, it will be IMDA, that would play the role of the gatekeeper. And if you want to acquire shares in DBS or in Singtel that goes beyond a certain percentage, you do need the regulator's approval before you're allowed to do so. So in a way, that's already covered. Thank you, sir.
Minister Edwin Tong, anything to add? No. Mr. Leong Mun Wai. Succinct and straightforward, please. No, I've called you.
Thank you, Deputy Speaker. Actually, my point, allow me to do two responses to what the Minister had directed towards me during his speech. My first point is also about civil servants, something similar to what Member Jamus Lim had just said. I quote, "Today, I've not said anything about civil servants. What I've said is, I would like to acknowledge the efforts put in by MCCY and MAS to scrutinize the transaction and come out with this bill. So this is an appreciation of the work done by MCCY and MAS. But I have directed at the ministers. It is the responsibility of the cabinet minister to ensure that they are appraised of all relevant and important information, and to consider them fully before making decisions and public pronouncements. I'm saying that because on August the 6th, we spent more than 1 hour clarifying during question time about this whole deal without complete information. And so we are running parallel all the time. And you can also say that it was quite a waste of time. But what happened now is that now with more information, we know that the ministers and the NTUC Central Committee, actually they do not have the information on the capital reduction. So we understand that point. But still, we are concerned about the coordination and how things are being presented before the information is complete. So that's one point. I want to respond to the minister when he said that I'm bringing in the civil servants and all that. A point that's similar to what Professor Jamus Lim has said. The second point that the minister has said is about my characterizing the exercise as asset stripping. In finance, nobody with some knowledge about finance would disagree with me. It's a fact. It has nothing to do with the intent. You can intend, your intentions can be good, but the plan that you put up is actually not so good. You can even say detrimental. That's why government now is coming back after all more work and said, oh, this plan cannot go through. Right? The plan is not a good plan from the point of view sort of continuing with the social mission. And I got one more point to raise afterwards is that it is also not a plan that provides enough protection to policyholders. I myself being a policyholder. So it is not fair for the minister to say that I'm trying to characterize the deal in bad light. I'm just stating the fact. Anyone with basic financial knowledge wouldn't disagree with me. This is an asset stripping exercise. Thank you.
Minister Chee Hong Tat.
Mr. Deputy Speaker, I think, I was quite dismayed to hear Mr. Leong describe the 6th of August discussion in Parliament as, in his words, a waste of time. I think it provided the opportunity for members to ask questions and for MCCY and MAS to clarify what is the status of the situation at that time, and then to hear the concerns of the members. I think it is not correct, and I hope Mr. Leong could withdraw that comment too, to describe that process as a waste of time. The point about whether information should be made known during a discussion, I had clarified repeatedly that when we came to Parliament on the 6th of August, both MOS Edwin Tong and myself made it clear that there was no regulatory approval given to the deal. It is something that is still being evaluated, considered, and therefore, in response to Mr. Leong's point about before we make any decision or pronouncement, we should have the full set of information. Indeed, that's why after the 6th of August sitting, when MCCY received the information from MAS, the agencies then got together, the ministers then got together and discussed, and eventually Cabinet made a decision to bring this bill to Parliament. This is the decision that we are seeking approval from Parliament. So I don't think there's any departure from what Mr. Leong described as what he expects the government to do. But on the 6th of August, there were PQs filed, unless Mr. Leong is suggesting that we don't answer PQs. If not, at that point in time, because the deal is still being considered, no approval was given yet, I think it was only correct that we give information based on, or give replies based on information that we have at that point in time. But because there was no regulatory approval given, there was no decision or pronouncement by the government. The second point that Mr. Leong raised, Mr. Deputy Speaker, I find it quite odd that Mr. Leong, on one hand, would say he's not trying to characterize it negatively, and on the other hand, he's made it quite clear that this is a bad deal. We have explained why the capital reduction plan on its own would not be something that's uncommon. An entity, whether income or another insurer, another financial institution, to do capital optimization, I think Minister Edwin Tong explained this, I explained this as well, and Mr. Leong, I'm sure, understands. Financial optimization is something that entities, companies do regularly. So this by itself is not wrong. So when MAS was looking at this initially, they were looking at it from a prudential point of view to see if you do this, would income still have the necessary capital to meet its capital adequacy ratio? From a prudential point of view, is this something that we would be prepared to consider? But as I mentioned earlier in my closing speech, there was no application by Allianz on the capital reduction. They only submitted a prelim business plan in mid-July. So I would like to suggest that perhaps it's not very useful and productive for us to argue about different adjectives being used, but I think, as Ms. Hazel Poa said earlier, we let the public decide which phrase was used by Mr. Leong and which phrase was used by me, and to describe this exercise. And I think Hansard will reflect that Mr. Leong did indeed say it's an asset stripping exercise.
Mr. Ong, go ahead.
Thank you. Minister, it's been a long day, so I apologize if I failed to hear this in your response. I do understand that the factors were being looked at cumulatively, but referencing my speech, can the Minister clarify whether the lack of clear binding provisions or structural protection around income social mission alone is sufficient reason to merit the blocking of this deal?
Minister Edwin Tong.
Thank you, sir. Thank you, Mr. Ong. I had mentioned a series of factors that we looked at, one of which is the lack of a structural protection. So this taken in the context of the suite of terms, as well as the circumstances in which the capital reduction was done and the amount were cumulatively the factors that we took into account, not any one single factor on its own.
Ms. Sylvia Lim.
Thank you, Deputy Speaker. I have two clarifications. First, I don't seem to recall either of the ministers clarifying the questions raised by Ms. He and Ms. Poa about whether MAS needs this bill. In other words, does MAS not have sufficient power within its current jurisdiction to take into account the public interest in having affordable financial products, and therefore, actually, is this bill really necessary? I don't recall either minister touching on this point. Second is a clarification for Minister Chee. Would he at least acknowledge that what Parliament is being asked to do today is to pass this legislation that is targeted at a live transaction, a particular one, to introduce a legislative change that would affect that live transaction? And does he not acknowledge that this sends a very bad signal to the business community about business certainty?
Minister Chee.
Madam Deputy Speaker, I had actually covered both points in my closing speech earlier, but Ms. Lim may have missed it, so if, with your permission, Madam, can I just read those sections again? Huh?
Please proceed.
Thank you. So this is what I said earlier, that the bill does not affect any completed transaction because there's no formal application yet by Allianz to obtain effective control and become a substantial shareholder of income. And therefore, there is no retrospective application of the law. So that is what I have said. There's no formal application yet by Allianz. Second, the point about why MAS doesn't have the powers, I've also explained this, that the existing sections 26 and 27 of the Insurance Act, there isn't an explicit provision under the Insurance Act for MAS to take into account the views of MCCY, which will include questions relating to social mission in assessing a proposed acquisition of an insurer with cooperative links. So we can't rely on the existing provisions without this set of amendments. And because it is a proposal that is under consideration by shareholders, there is urgency. So yes, we don't disagree that there is a deal that is being considered. But it is a fact, sir, that there is no formal application by Allianz to MAS.
Ms. Hazel Poa.
I thank Minister Chee Hong Tat for his reply on Section 26 and 27. Now, I agree that there are no specific provisions at the moment to take into account MCCY's views, but at the same time, the existing legislation does not prohibit MAS from taking into account those views. It's actually left open. So why is Section 26 and 27 not sufficient? My second clarification is referring to Minister Edwin Tong's reply that the capital resilience can be improved by reinsuring. Now, my point was that the reason for this sale of income insurance was presented as the need to improve capital resilience. But if the capital resilience is actually improved through reinsurance, then it has nothing to do with this acquisition by Allianz. So why is that presented as the reason? Thank you.
Minister Chee Hong Tat.
Mr. Deputy Speaker, I thank Ms. Poa for acknowledging my explanation that there is no explicit provision under the Insurance Act for MAS to take into account the views of MCCY relating to social mission. Sir, if we depart from what MAS has been doing all these years as a prudential regulator under Section 26 and 27, where we assess applications from financial institutions, to suddenly say that we now will take into account social mission because we interpret this very broadly, I think first that itself could lead to more uncertainty for the industry players because they will be wondering, the next time, would you then change the interpretation to something else again without being clear about the reasons why you're doing it and being transparent about how you're doing it? And that is why, as Ms. Jessica Tan mentioned earlier, we prefer to take a more open and transparent approach of coming to Parliament to seek Parliament's approval for this change, to address the concerns that we have, but to do so in a tightly scoped manner so that the rest of the industry who are not co-ops or who have no links to co-ops need not worry that this new provision taking into account social mission will also apply to them. Thank you.
Ms. He Ting Ru, Minister Edwin Tong, do you want to add to Minister Chee's statement?
Yes, I was going to respond to Ms. Poa's second question. Again, as I said just now, I'm not able to, and I'm not going to speak on behalf of income, but you did make a point, and you suggested in your speech that the statement, which I got you to confirm earlier, that capital resiliency following the transaction was misleading. And that's the point I was trying to make. And I think earlier on, we agreed that that's the reference that you were making in paragraph 7. So the point really is this, Ms. Poa. The transaction is contemplated between an insurer, Income, and another insurer, Allianz. It is also proposed that following the transaction, the plan was to optimize capital. One of the ways in which it was going to be done was to reinsure a portion or a portfolio of income's risks. Taken together, the statement, therefore, that after transaction is carried out, its capital resiliency would be improved is, in my view, not misleading. And that was the explanation I gave to you. And I also explained to you that you can improve capital resiliency in a number of different ways, such that even after capital reduction, you could still have an adequate capital adequacy ratio.
Ms. He Ting Ru.
Thank you, sir. I have two clarifications for the Minister in charge of MAS and one clarification for the Minister of MCCY. In relation to my clarification for the Minister in charge of MAS, I think the Minister mentioned twice that there was no formal application made by Allianz in relation to this proposed acquisition of the majority share stake in income. So I just wanted to ask some clarification because in the proposed new section 33A of the Act, in subsection 9, it states, and I quoted this in my speech actually, this section applies also to a relevant application received by the authority before the date of commencement of the Insurance Amendment Act 2024 that is still pending as of that date. So if there was, can the Minister clarify whether this refers to to this transaction or another transaction? So that's my first clarification. And then my second clarification relates to the urgency, the points that I made about why the urgency of this bill, that such that, within 3 days this was actually going to be, it needs to be passed, going through second and third reading. So I think the question here is that the Minister mentioned earlier that the reason why we are rushing through this bill under a certificate of urgency is because this deal is under active consideration by shareholders. But from my understanding of this, shareholders can vote however they want, they can consider however they want, but honestly, the offer is ultimately subject to regulatory approval, and that's why it's called a preconditional offer on the offer document. So I'm just wondering, given that, also mentioned in my speech, given that the long stop date is 9 months from the date of announcement, why is there this rush to do this? So that's my second clarification. And my clarification for the Minister for MCCY is, I think I heard the Minister say earlier, this is in relation to the exemption granted to the 2023 Gazetted exemption order. I believe the Minister mentioned that there's some flexibility needed for I guess, to allow to use the surplus to achieve the mission. And I just wanted the Minister to clarify that no conditions were imposed on the use of the surplus in that respect. Thank you.
Minister Edwin Tong.
I had answered Ms. He's question, and when I used the word flexible, it was in the context of my answer to Mr. Chua's query about the extent to which social mission might evolve. And that was when I used the word flexible. But in the context of the exemption, there was a series of discussions. I mentioned in my speech on Monday that we engaged with income over a period of time. We exchanged views. They sent various letters representing their position, and it was on this basis that the corporatization and the exemption was granted.
Minister Chee.
Mr. Deputy Speaker, I'd like to confirm that there's no formal application from Allianz to MAS. The provision that Ms. He mentioned, that is inserted more for avoidance of doubt. The second point that Ms. He raised, this bill is urgent. We need a certificate of urgency because the deal is under consideration by shareholders. So by having a long period between the first reading and the second reading before the law, the amended law, takes effect, actually we give rise to more uncertainty in the market and for the parties concerned. And that's why we are putting forth this bill for Parliament's consideration and for approval.
Okay, we are at the 3.5-hour mark. We started this debate at 3:50. It's now coming to 7:25 p.m. I see the hands are really hands of members who have already asked questions. I will allow there to be a second round of clarifications. Just to confirm, I see the hands of Ms. He Ting Ru, Ms. Hazel Poa, Associate Professor Jamus Lim, and Mr. Leong Mun Wai. Are there any more clarifications beyond these honourable members? None. So I invite the 4 honourable members to keep their clarifications succinct and clear. And we'll start with Ms. He Ting Ru, followed by Dr. Jamus Lim, Mr. Leong Mun Wai, and then Hazel Poa.
Thank you, sir. I think I'm still a bit confused because, in this kind of condition, as I mentioned earlier, the deal is a preconditional offer. So it's always subject to regulatory approval. So again, the shareholders can consider that. And again, we've got a 9-month long stop date. So I don't really understand why the minister is saying that, given that it's under consideration by the shareholders, we have to rush through, because shareholders know that regulatory approvals take a certain amount of time, and they know that all these are actually being debated, and then the amendments are being proposed. So I'm not entirely sure that the two are necessarily connected. Thank you.
Minister Chee Hong Tat.
Mr. Deputy Speaker, I have already explained the reasons from the government's point of view. I accept that Ms. He may have a different view, but I've explained why we want to provide greater certainty on the decision and on the changes to the legislation for the different stakeholders, including the shareholders, but also other parties who are involved in this deal. That's the reason why we are doing it with a certificate of urgency, but it is, of course, subject to Parliament's approval.
Associate Professor Jamus Lim.
Thank you, Deputy Speaker, for your indulgence. I don't plan to prolong this, but Minister Chee had requested that I withdraw an allegation, if I'm correct, that there was a communication breakdown between different arms of the civil service. I'm happy to make this withdrawal, but I'm a little puzzled because it is actually, in his words, that there was an information gap. This was presented on Monday between MAS and MCCY. Now, I understand I characterized this as a communication breakdown instead, but perhaps Minister Chee is triggered by the word breakdown. Let me, again, I'm happy to withdraw the statement if he thinks it's a matter of terminology. Now, the second point is that he had asked me to make a suggestion, and I did so in my speech, for how I think we should go forward. So this is the constructive part, and that is that I think future transactions of such strategic importance should at the outset involve the establishment of a multi-ministry task force.
Minister Chee.
Thank you, Mr. Deputy Speaker. I also do not want to prolong this debate, but just to clarify, I wasn't asking Associate Professor Lim to withdraw his comment about the communication breakdown. He's entitled to use that phrase if he prefers to. I was referring to his comment that the public officers are unable to share information due to constraints imposed by the government of the day. That was what I would like to request, that Associate Professor Lim withdraw that comment, because that is not true. We do not put barriers to prevent our public service officers to share information. In fact, in this case, the decision to share information was proposed by the public officers and supported by the political office holders on the MAS board.
Mr. Leong Mun Wai.
Deputy Speaker, sir, I have two questions for the Minister. One is that he didn't quite answer what I've asked in the speech. Did the government or MCCY make an effort to ask Allianz whether there's a way that this deal can be aborted without us having to come and debate a new law, and introduce a new law for this? That's maybe one way of doing it. Well, I heard some laughter in the chamber, but this is very common. I'm in the finance industry for a long time. If the regulator come to you and say that, oh, I think your deal, maybe you can consider this and that, then, there will be negotiation going on. So I think that should be something. If you didn't do anything on that, then it's okay. I'm just seeking an answer whether you did ask Allianz for that. Okay. Secondly is that I think, and it's a wish on the part of policyholder, which I repeated many times, that I myself is a income policyholder. We have supported income all these years. And I think there's a lot of trust because income is a public, is a company that's under the NTUC, and we Singaporeans have a lot of trust in income. So, and over the years, because of our support, there's a lot of surpluses built up in terms of the policies, in the policy funds that are accruing to the policyholders. So can I get can I ask the minister whether the government can do something to remind NTUC that in the future, when they sell the company, if they have a new deal, their social responsibility will cover also their responsibility to the policyholders. It is not just the responsibility of the social mission that the government is talking about. Because it really worries me that you get an acquirer, potentially, and I'm not referring to anybody, that comes in and what they're interested in is capital restructuring. And when you restructure the capital, you go and find all kinds of surpluses in the company, And another surplus that an insurance company potentially has is in the policy fund of the policyholders. So what I'm saying is that I was wondering whether I can get assurance from the minister that this message will be passed on to NTUC. Thank you.
Minister Chee Hong Tat.
Mr. Deputy Speaker, I will address the first question that Mr. Leong raised. I have explained earlier that we have engaged Allianz and what their response is. Along the way, of course, because they were submitting business plans, there were certainly discussions between MAS and Allianz on what they have submitted. But I do want to make a point, Mr. Deputy Speaker, that the government, when it comes to dealing with our licensees and with industry players, we would like to take the approach of being open and transparent, and that if we have concerns with the deal, we have our reasons. We would rather do it in a manner like what we are doing now, come to Parliament with a proposed bill, explain why we are doing it, rather than, and I hope that's not what Mr. Leong is suggesting, because to go to the company and say, as a regulator, I don't think you should be doing this, and I think you should be backing off. I think if you do that, you may actually send more uncertainty and create more worries in the industry. Now, Mr. Leong is shaking his head. I don't know whether that means he agrees with me that that's not what we should do, or he thinks that that's what we should do. If he thinks that's what we should do, then I would say we have to disagree, because we believe that as a regulator, to uphold the reputation of our regulatory system and the transparency of our financial sector, to be able to continue to attract investors, as what several members have spoken about. I think it's important that we deal with our licensees in a manner which is above board and that they understand. So if you look at the reaction from Allianz, they said they understood the government's decision. And I think that's important because we want to continue to be a place that foreign investors, companies want to come to, create more good jobs for people. I think that's important.
Minister Edwin Tong.
Mr. Leong, I said earlier that it's not for us to tell any or income or indeed any party what to do and how to run the business. You've also mentioned that as a policyholder yourself, and you sort of conflated that point with surpluses and suggested that there might be some risk to the surpluses. These are all subject to capital adequacy ratios that income are complying with. In fact, they will be required to comply with. So from that perspective, I think you don't have to worry.
Ms. Hazel Poa.
I would just like to clarify that my point was not that the capital resilience after the sale is misleading. If I misunderstood the minister earlier, I apologize. My point has always been that presenting improving capital resilience as the reason for the sale is misleading, because we now see that the capital resilience is improved through reinsurance, not through the sale to Allianz.
Minister Edwin Tong.
I thank Ms. Poa for clarifying, but I think when I first answered your question, I quoted you and I asked you whether that's what you meant, and you said yes. So that's how I answered your question. But be that as it may, the point is, in this transaction, they were entering into a transaction with an insurer and had plans to reinsure part of their portfolio of risks. And so in that context, the simple point really is, in that context, the statement that was made in the reference you gave, paragraph 7, is not misleading, because there will be improvement to capital resiliency after the transaction.
Right, I think we have respected the importance of this bill through a close to 4-hour debate, and I think it's timely to put the question to the House. The question is that the bill be now read a second time. As many as are of that opinion say aye. Aye. To the contrary, say no.
Mr. Deputy Speaker.
Ms. Sylvia Lim.
Members from the Workers' Party would like our abstention recorded.
Yes, I listened carefully to Ms. He Ting Ru, who, if I'm not mistaken, said we need to register our abstention on this bill. So does that apply to just Ms. He Ting Ru or all of Workers' Party?
The party, sir.
Are you abstaining or are you objecting?
Abstaining.
Could you stand up, please, so we can record your abstentions? How many abstentions? 8. There are 8 abstentions, 7 abstentions. Less those 7 abstentions, everybody else has voted aye.
Thank you, sir.
I declare that the ayes have it. The ayes have it.
Insurance Amendment Bill.
At this point, I wish to state my opinion that the bill is a hybrid bill. Although the provisions of the bill are drafted in general terms, it is clear from the ministerial statement by the Minister for Culture, Community and Youth on 14th October 2024, and from the second reading debate today, that the bill is in substance aimed at the proposed acquisition of Income Insurance Limited by Allianz Europe BV. Consequently, under the provisions of Standing Order 68, the bill should ordinarily, after the second reading, be referred to a select committee. However, Standing Order 86 provides that notwithstanding the provisions of any standing order, when a certificate of urgency signed by the President of the Republic of Singapore has been laid on the table, the bill to which the certificate relates may be proceeded with throughout all its stages until such bill has been read the third time. Standing Order 86, therefore, takes an urgent bill outside the ambit of Standing Order 68. The bill before the House today can therefore be committed to a committee of the whole House despite Standing Order 68. And therefore, I ask the Minister, committee stage, what day?
Now, sir, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
The question as posed by the Minister is that Parliament will immediately resolve itself into a committee on the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 3 stand part of the bill. As many as are of that opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. Bill to be reported. The Second Minister for Finance.
Mr. Deputy Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading, Court Day.
Now, sir, I beg to move that the bill be now read a third time.
The question as posed by the Minister is that the bill be now read a third time. As many as are of their opinion say aye. To the contrary say no.
Mr. Deputy Speaker, again, the members of the Workers' Party would like our abstention recorded.
So you are abstaining and not objecting?
Yes, abstaining.
Could I ask all those who are seeking to abstain to stand in front of your seats? How many? 7. There being 7 abstentions, and notwithstanding the 7, everybody else in the chamber has voted aye. I think the ayes have it. The ayes have it.
Insurance Amendment Bill.